everybody, Kartik Subramaniam over at ADHI Schools. If you are a homeowner in California, you are definitely going to want to watch this video because I'm going to go over some key changes in the proposed stimulus package, HR 6800, that is going to be of enormous benefit to you. Now, there's a bill right now called HR 6800 that already passed the House. It's now moved on to the Senate, and there's a particular section in this bill that I think you'll find extremely valuable, and you'll have our fingers crossed if you're a real estate owner in California, because in 2017, the Trump administration passed their tax reform. I'll put a link in the cards here above where I talked about it. The maximum amount of SALT taxes that could be deducted was $10,000. What are SALT taxes? SALT taxes are state and local taxes. One key benefit to owning a home in the United States was that every dime in property taxes was previously a tax write-off. Now in California, where you have houses that are, $700,000, $800,000, $1 million and up pretty routinely, you'd have people that paid well over $10,000 a year in property taxes, especially in areas like Orange County or West LA. This was also true in higher cost areas on the East Coast, New York and New Jersey, where people would have houses that were paying $15,000, $20,000 a year in property taxes. But in 2017, the Trump tax plan reduced the amount of those state and local taxes that you could deduct to $10,000. Nita Lowey, who is a New York congresswoman, sponsored a bill, of course, it's HR 6800, and essentially there's a portion of HR 6800, I'm going to put it on the screen here. Right now, it looks like there's a 95% chance of this bill passing, according to Scopus Labs. So it's prognostication, but it looks like it's probably going to pass the Senate. And it's section 20161, and you'll see it on the screen here. Essentially, this would, for the tax years 2020 and 2021, say that the amount of property taxes or the state and local taxes that you could deduct are basically unlimited. So it would repeal that portion of the administration's tax plan and would basically allow property owners for tax years 2020 and 2021 to have an unlimited deduction in their property taxes. Now, this has not yet passed. It passed the House. It still has to go to the Senate and, of course, be signed by the president. But this represents, for our real estate community, this would represent a huge step forward in property owners, A, being able to take a greater tax deduction, B, at least in the near term, folks that are considering or on the fence about buying maybe a more expensive home. The thought is that this would maybe push them over the edge to making that larger purchase because the state and local tax cap of $10,000 would not be limited. So this is helpful, and we'll be monitoring this closely to see if this actually passes, but fingers crossed. Now, of course, if you're in other areas where you don't have average sales prices that are a little higher that would trigger over $10,000 in these state and local taxes, perhaps this doesn't mean as much to you if you're selling real estate in a lower priced area. But for us in Los Angeles and Orange County and Southern California and in New York, this would represent a huge step forward, and it would allow us to deduct, and our clients to deduct, more of these property taxes than we, at least for the last couple of years, have been able to. Anyway, leave a comment below. Are you tracking this bill? Do you think this would be a good thing? Do you think this would be a bad thing? It's hard to see where it would be a bad thing, but of course, less taxes paid means less revenue for the government, which means less of all sorts of things that the government provides. So I understand the need to balance the requirement to collect taxes with, the individual taxpayers wish that we don't pay as much taxes as we do, but I guess that's called life. Anyway, catch you guys on the next video. Would love to hear your comments. Talk to you guys soon.